Can you really build serious wealth starting with just 500 rupees? I know, it sounds kind of crazy, right? But it's absolutely possible. Today, we're going to break down the exact steps to turn small, consistent savings into a real financial future. So let's dive in.
This quote, man, it really hits home for so many people. You know that feeling, right? Like you're stuck on a financial treadmill. You're working hard, but that bank balance just never seems to move. Well, if that sounds like you, then what we're about to cover could really truly get you off that treadmill for good.
So first things first, we have to talk about a hidden problem, a kind of silent thief that's working against your money 24/7. This is the big reason why that old advice to just save your money isn't really enough anymore. So let's just ask the question straight up. Why isn't it enough to just stash your cash in a savings account? Well, the answer is a powerful force that most of us completely underestimate. Okay, here's the simple, kind of brutal math. Your savings account, right? It might give you, say, 3 or 4% interest, and that feels good. It feels like your money is growing. But at the exact same time, inflation, that's just the speed at which prices for everything go up, is chipping away at your money's value by about 6 or 7%. So what your money can actually buy is shrinking every single year.
And that leads to this totally counterintuitive idea. You think your money is safe in the bank, but you're actually losing its real-world value, just safely and slowly. To build wealth, your money can't just grow, it has to grow faster than inflation. And that, my friends, is where investing comes in.
Okay, so if saving is a losing game, what's the plan? Let's make this super simple. We can map out your whole money strategy using just 3 buckets. That's it.
First up, we've got the safe bucket. This is your foundation. Now, its job is not to make you rich. Nope, its job is to keep you safe. This is where you keep your emergency fund, money you can get to fast without any risk. Think of it as your financial fire extinguisher.
Next, we have the growth bucket. Honestly, for 99% of us starting out, this is where the magic happens. This is where real wealth actually starts to build. We're talking about things like index funds or mutual funds, which are designed to spread your money across lots of different companies to grow it steadily, beat inflation, and build that long-term wealth.
And finally, the high-risk bucket. You gotta think of this as the casino. This is for stuff like direct stock trading or crypto. And the rule here is dead simple. Never, ever put money in this bucket that you are not 100% prepared to lose. This is for advanced folks, not a place to start.
This chart pretty much sums it all up. The relationship between risk and reward is a fundamental law of finance. The safe bucket, low risk, but you get low rewards. The growth bucket gives you that balanced, medium risk for a solid medium reward. And that high-risk bucket, well, it offers the potential for high rewards, but only if you take on some seriously high risk. And let me be absolutely crystal clear on this, because it's one of the most important rules you'll ever learn. If anyone, a friend, an influencer, some ad online, promises you guaranteed high returns with low risk, they are lying. Full stop. There are no exceptions to this rule.
All right, enough theory. You get the why and the what. Now let's get down to the how. This is the exact, actionable plan for making your very first investment.
Yep, that's right. Just 500 rupees. The single biggest myth in investing is that you need a lot of money to get started. You don't. You just need to start.
So here's your 3-step plan. Step 1, build that emergency fund in your safe bucket. Once you've got 3 to 6 months of expenses saved up, you move to step 2, start an SIP. That just means you automatically invest a small amount each month. Your first move is a 500 rupee monthly SIP in a Nifty 50 index fund. It's a super simple way to own a tiny piece of the 50 biggest companies in India all at once. And finally, step 3, just promise yourself you'll learn the basics before you even think about those high-risk options.
Please, just let this one sink in. The person who starts investing 500 rupees a month in their 20s will almost always, and I mean always, end up wealthier than the person who starts investing 5,000 rupees a month in their 40s. Time and consistency are your secret weapons. They're your superpowers.
Now, before you start, it's just as important to know what not to do. So many new investors make the same predictable mistakes, and it costs them. Let's make sure you're not one of them.
Let's quickly run through these wealth destroyers. First, don't invest just because you got a hot tip. Do your own homework. Second, don't panic and sell when the market goes down. Long-term investors see those dips as opportunities. Third, forget about getting rich overnight. That's gambling, not investing. And finally, never, ever put all your eggs in one basket. You've got to diversify.
This is the mindset shift that changes everything. You know, real investing, it's actually kind of boring. It's methodical, it's consistent, and it happens over years, not days. All that excitement you see in the market, it's usually just a distraction from the slow, steady process of building real wealth.
So, if you only remember one single thing from all of this, please make it this one golden rule. It's the foundation for everything we've talked about.
Here it is. It's so simple. Start small, stay consistent, think long-term. That's the whole game. You start with what you can, even if it's just 500 rupees. You make it a habit, month after month, and you always keep your eyes on the long-term goal, years and even decades down the road.
Ultimately, all this knowledge is really just potential power. Action is what makes it real. You have the blueprint now. The path is clear. So the only question left is, what are you going to do with it? What's going to be your first step?